Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can notice is that at the moment we do have a range-bound market from a monthly standpoint. In fact, what we can do is easily identify the bottom of the range here on the monthly time frame being at this level, which the market has already respected in multiple occasions. And at the same time, we have the top of the range, which is currently at this level, which again, also here, it has already been respected in multiple occasions. And it is currently, as we're speaking, acting as resistance and making this market rejected to the downside. So from a monthly standpoint, at the moment, this market seems trapped in between this resistance and support. And until the market will continue to be in between these two levels, we could simply expect more horizontal price action to be created here for this market. We can also keep in mind that when there is a range-bound market, usually the most effective patterns, the patterns that complete the most are W and M formations. So let's keep that in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the situation is currently quite clear. We have a strong impulse and then the market has now followed with a correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can notice is that at the moment, the market is rejecting to the upside slightly the 0.618 of the Fibonacci taken on the impulse leg, which is a quite strong support zone. So there is the fact that the market is reacting to this level is not surprising to me because I have seen this happen many times. And there is the possibility, in my opinion, to see a bit more bullish price action away from this level, potentially also for a retest of the high of the range before then getting a potential move to the downside or even a break above the level. But in my opinion, there is a good probability to see a potential short-term push to the upside away from this level. Going down on the daily time frame, what do we see? Well, from a daily standpoint, the situation starts to be quite interesting because it is quite clear how in creating this move to the downside, the market has also just printed this M pattern. And in general, after the creation of an M pattern, what you would usually expect is to see a potential rejection to the upside, completing the M pattern at the neckline. And in this case, the neckline would be this previous support and resistance. So there is a good probability of seeing a potential push higher, completing this M pattern at the neckline. I also spoke about USDCAD quite a few times in the past. I spoke about it when the market was around this level. I explained all the reasons for which we could expect first this push higher, then the completion of this W formation, and then the continuation to the upside, which is in fact exactly what the market did. And then after this impulse and correction, I explained all the reasons for which we could expect the creation of a new potential daily higher high, which again is exactly what the market gave us. And by the way, I will link in description these previous analysis so you can go and check them out for more free education. Now, at the moment, as we have this M pattern from a daily perspective, we have to understand what we also have. So from an institutional perspective, so essentially from a technical side, everything is clear. We have an M pattern. There's a good probability of a potential push higher. But what is the institutional side of the market doing with this price action? Well, to answer that, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing, and let's check the data precisely for the CAD. Now, the first thing that we have to keep in mind is that if we're looking at the data for the CAD, we're actually already looking at CAD USD because all currencies on the spot are traded against the USD. And if we want the info for the USDCAD, we simply have to reverse everything that we read here. So if we see that net positions with the last reports have been massively decreased from minus 800 to minus 181K, it means that essentially institutions have been moving to the bearish side for the CAD. So they have been increasing their shorts, which in fact went from 37.9K from an institutional perspective all the way up to 203K, and longs got decreased. We went from the high here at 45K all the way down to 21K. So institutions have been increasing their shorts and decreasing their longs on the CAD, meaning that essentially they have been longing USD CAD by shorting the CAD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. Well, from a daily standpoint, as I was saying, we have this M pattern. And since institutions are already longing USDCAD, there's a good probability to see a potential completion of this M pattern at the neckline. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.